that explains the yachts too, though, because like you
Yeah.
can't. So when people get audited, this is a really good question. I feel like it'd be pretty hard for an auditor if you're a business owner and like you can justify everything for an auditor to really press back on anything. No.
As long as you can prove it, right?
So when you say prove it, what do you mean? Like
Okay,
how
so
much proof do I need?
well, so this is probably the place where people falter the biggest is in their reportings and is in their records, right? Like for example, I was with this group today and I said, if you're an S corporation, you have to, like, there is no ifs, ands, or buts about it. You have to have a payroll. You have to be paying yourself a wage, right?
Okay.
You have to have a profit and loss sheet and a balance sheet. Like those are just like the most simple forms of accounting that you can have, and you have to have a profit and loss and a balance sheet so that you can give that profit and loss sheet to an IRS auditor and they can look at it and say, okay, now let's verify these expenses with statements, with receipts, with transactions, right? Now, like for example, when it comes to the Augusta rule, are you aware of the Augusta rule?
Is that the, like we write off part of your house? Well, you can rent it to yourself.
Yeah,
for
up
certain,
to 14 days during the year,
Is
and
it
you
at
don't
market
have to.
rate? Or
It's market rate. Yeah, like for example, I have
whatever
a
rate
client,
is on Airbnb.
Exactly. Yeah, that's kind of, or what it would be to rent out a space of the same size, like for a
So
commercial
explain
space.
it to everybody.
So what the Augusta rule came about because of the PGA Tour, the Augusta Nationals, right? Where all of the rich people that lived on the golf course would leave for 2 weeks while the PGA Tour was happening there, and they would rent their homes out. That's kind of how the rule got its name, the Augusta rule. So what they've done is if you are a business owner, you can rent out your home to yourself, your business. You can rent it out to your business for up to 14 days during the year, and you don't have to report that income as a taxable source of income. So, like I have a client who rents out his home to his business once a month for team meetings and trainings, right? For a market rate, and doesn't have to include that as income on his personal taxes, but he can include it as a business deduction on his business taxes, right? But for something like that, for the yacht or whatever that might be for investors or individuals that own businesses, is okay. For this Augusta rule, I have to have him keep track of how many hours they're doing team meetings, who was all in attendance, who was speaking to them, what they talked about. They have to have some sort of agenda that dispels what they would be doing.
Minutes.
Minutes that they would have been having otherwise. Same kind of thing with maybe like a boat or a yacht. As long as I have some sort of history or report that tells me I took Sam and Billy to X place and we wrote up this deal or we wrote up that deal.
Raise money for X deal.
Absolutely, yeah. When it comes down to it, as long as your expense or your activity has a business purpose, it is ordinary or reasonable. Like I look at myself as an accountant. Would an accountant rent out a yacht to have those team meetings? No, they wouldn't. So would the IRS probably not allow that? Yeah, they might not allow it. Right? I can try, but they might not allow it. Is it ordinary? Is it reasonable? And does it have a business purpose?
Is ordinary is reasonable and have a business purpose?
Yep.
Okay, but then I feel like we can go into ordinary. Like some people's life that is ordinary is a lot different than other people's ordinary life.
So, and I think the IRS takes that into consideration. Just being honest with you, for the most part, a lot of the auditors that I've worked with they're really good people. They're really good. There have been a couple bad apples, but there are everywhere. So, as long as, again, ordinary, reasonable, necessary, does have a business purpose, those kind of 3 or 4 things, then yeah, you're good to go.
Then you're good to go.
Yeah.
What else can people do to like save money on taxes, like stuff like the Augusta rule?
Well, so I was actually reading a book yesterday and it defined, like I've never heard it better. The book's called Tax-Free Wealth by Tom Wheelwright. He's Robert Kiyosaki's accountant.
Yeah.
Okay. Phenomenal guy. I'm actually speaking on stage with him in April. I'm stoked about it.
Congrats, bro.
But he kind of broke it down into taxes are always paid on net income. Like no matter if you're in real estate, if you're a W-2, if you're a business owner, they're always paid on net income. Your W-2 just might be your gross income because you have no other deductions.
Yeah.
So in that order, the best deductions always start out with business deductions. The second best are real estate deductions. Now, the only reason real estate deductions are second best is because not everyone can utilize the full amount of their real estate deductions if they're not an active investor or a real estate professional, because then they're capped, right? Then the third best deductions are personal deductions. Right now, you'd be capped at $10,000 for personal and state taxes, right? You have charitable contributions, and you've got medical deductions if you're lucky, right? So that's the fourth. The last best are deductions for investments, you know. But you look at that order and you think that's kind of the order of investing, right? If I'm taking the role as a financial advisor, I'm talking with my clients, the best investment that they can make into themselves is a business. The second best investment that they can make is real estate. The third best investment that they can do is in the market.
Yeah.
Honestly, for an ROI, you think about it.
I feel like for the market, depending on if you're doing the market full time, like if you're a savage trader,
Yes, yeah, obviously. I'm just saying for like the gen, but you look at
Gen
it in
pop.
that. So going back to the question, yeah, your business deductions, real estate deductions are always going to be your best deductions. And if you don't have either or, find them. You
Yeah.
know, start to invest in areas that you can get those deductions because that's what's going to save you more money in tax.